oh, by the way, I believe we might hear from the Federal Reserve Chairman that they're not thinking about raising rates for the next 5 years.
You know, and Stephanie, obviously we talk about the Fed, and they are a massive part of this market. We can debate whether it's 100% or 50%. They're a big deal. But is it more on the Fed side about rates, or is it more that we have direct buying of bonds and ETFs, which then frees up all that cash that may otherwise be used to have to buy those to buy stocks? Because if you have two cars and somebody buys one, now you can put more money into the one you've got. And that kind of feels like what's going on with the equity market.
It's kind of both, Brian. It's low interest rates, and they're going to stay low forever. I mean, I think it's years, quite frankly, at this point. But it's also the liquidity that you're talking about. It's not only the monetary policy that has been put in place, but it's the fiscal policies as well. And I think you're going to get more fiscal policy because we can't have 1 million initial claims that are announced each week and the job market be so sour. They have to do something. So I think there's more coming. So we've had money supply up 30% in a year. I mean, that's just tremendous. And I always cite this number,
Wow.
but if you add up fiscal and monetary policies, this year is 44% of U.S. GDP. Back in 2008, when we had the last crisis, it was 5%. So it's enormous liquidity. You're not going to be fighting this. And I think tech will continue to lead because they are secular growers. But I do think you want to continue to have a barbell and have some cyclicals as well. And I know we're going to talk about that theme in a little bit.
Yeah, I mean, listen, it's a great point, Carrie, that Stephanie brings up about money supply, because it's not just equities. Rates are low because there's demand for bonds. People buy bonds enough that they can keep rates low. By the way, real estate is hot. Gold has been hot. Bitcoin remains hot. The amount of just actual money in the world right now going into nearly every asset class. Honestly, I've been doing this 25 years. I'm not sure I can remember a time when I saw everything go up like this at the same time.
Well, you bring up a good point that asset classes have been in tandem and rising. But if we think about where we were in March, from February 19th through March 23rd, the market fell 34%. So that's not insignificant. We had a massive fall. And then people looked around and investors said, this is too cheap. So there's been buying that's been going on, and we talked about very low interest rates, and people were watching the market because everyone was at home, and they said this is a bargain, and people started to buy, and then those that had sold began to add to their holdings and didn't want to miss this uptrend, and that has fueled this, I would say, buying frenzy that we've been seeing over the last few months, where people don't want to miss out, and that applies to houses and gold and equities. But at least on the equity side, when we talk about tech and growth stocks, these companies like Apple, Facebook, Netflix, PayPal, Microsoft, they are doing better under this environment than they would have done if there was no pandemic.